Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 8th of May 2019. I'm Darren Sinden. You can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. A relatively quiet session on the global foreign exchanges, I think it's fair to say. Still one or two key points to bring your attention to. First of all, the euro stays on the front foot, but only marginally up by 0.12% against the US dollar. Up on the week, or up on the last 7 days I should say, but really not fulfilling the potential of the rally that we saw this time last week, and that still remains to be seen if the euro can, shall we say, find that upward momentum once more. Elsewhere in Asia Pacific, the New Zealand dollar down on the day, down by 0.18% against the US dollar. We'll look at some of the reasons for that momentarily. Interesting to note, though, that its compatriot, the Australian dollar, has managed to hang on to gains and is up by 0.14% against its US rival. Elsewhere, the Japanese yen appreciating further against the US dollar. The yen now trading with 109.96 handle, up by 1.26% against the US currency over the course of the last week. Does that say something about risk appetite in the markets, I wonder? Elsewhere, ahead of key actions in South Africa today, the rand has strengthened by 0.16% against the US dollar. Dollar index for its part trading down by 0.18%, down on the week by 0.24%, I note. So the dollar drifting there. Okay then, what's on the calendar? Events that may move the markets today? Well, it's mostly about what news we've had rather than what's to come this morning. We've already heard from the Reserve Bank of New Zealand, their interest rate decision and monetary policy statement. We've also had trade balance data for April out of China, and we'll look at both of these items in a bit more detail momentarily. To come this morning then at 05:45, we will have Swiss unemployment rate for the month of April, and then 15 minutes later we cross the border into Germany for industrial production figures for the month of March. And then we kick off with the first of 3 central banker speeches, this one from the Bank of England's Ramsden at 08:15 GMT. At 11:30 GMT, ECB President Mario Draghi will take to the lectern, and finally at 12:30 GMT, the Fed's Brainard will also be speaking. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Reserve Bank of New Zealand has cut interest rates in the country by 0.25% to just 1.5%, a record low for the country. The bank's new 7-member MPC indicated that rates could fall again by early 2020. From what I understand, the MPC statement was somewhat different in tone and language from the statement that had been previously produced in February. So a new sheriff's in town as far as monetary policy is concerned in New Zealand, it seems. China's balance of trade data showed a sharp drop in its trade surplus for April to just $13.84 billion, well below forecasts of $35 billion and last April's reading of $28 billion. On a year-over-year basis, imports rose by 4%, whilst exports fell by 2.7%, though to be fair, both metrics grew month over month. So an inconclusive set of trade data from China there. Still a surplus, still growth of a kind on a month-on-month basis, but not the bumper number that the market was looking for. South Africans head to the polls today for a general election that will be a real test for Cyril Ramaphosa and his ANC government. They're still likely to be the victor. However, there is growing discontent in the country about the rate of economic and social change, and there is a growing and increasingly powerful opposition movement. So it will be very interesting to see what the results there are in South Africa. And finally, food for thought and something to take away with you into the trading day and beyond. And why not think about this? A very interesting chart here on the right hand side shows us that large speculators' net short VIX positions are at an all-time record. So hedge funds and other large speculators are net short of the VIX, the volatility index, the fear and greed index, even if I can say that, at a level that we haven't seen since records began in 2004. What's also very interesting is that we saw a pullback yesterday in US equity markets on the concerns about global trade and in particular China and US trade talks. you can see that we're testing towards, or through in fact I should say, this uptrend line, this net putative uptrend line that I've drawn here in the light blue dash, and testing back towards the 50-day EMA. So what I'm saying here is we've started to see a bit of a pullback in US equities. There is this large short position in equity volatility. One could, of course, if things took a turn for the worse, feed into the other very quickly, and we could see a more meaningful pullback in US equities on that basis. Food for thought. I'm not saying that's going to happen, but it's certainly something to be aware of. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you are unclear about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, please do take the time to read this risk warning thoroughly. Thank you for your time today.